I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine inflation likely to have eased further on a week trade risks flare up. And the Securities and Exchange Commission approves Maynilad's 45.8 billion peso initial public offering. U.S. President Donald Trump's administration is seeking to pause a second court ruling finding the tariffs illegal. The second ruling involves two small businesses who sued the government for tariffs imposed to Canada, Mexico, and China due to the spread of fentanyl. U.S. District Judge Rudolph Contreras ruled that the International Emergency Economic Powers Act, which the president cited to justify the levies, simply does not authorize tariffs. This ruling had less impact than the federal trade court ruling because it only stopped the government from collecting tariffs from the two businesses. The Justice Department already filed an emergency motion before the U.S. Court of Appeals for the D.C. Circuit. It argued the decision would undercut Trump's ability to use the duties as credible threat in trade talks. An appeals court earlier allowed the tariffs to be in effect as it looks into the case after a federal trade court decided Trump didn't have the power to impose sweeping tariffs. The White House says Trump and Chinese President Xi Jinping will likely speak in a phone call this week. The upcoming call comes amid renewed tensions between the two superpowers. Trump accused China last week of violating the bilateral deal struck in Geneva to mutually roll back duties and remove restrictions for critical minerals. No exact date has been given yet on when the talks will occur.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls.
Meanwhile, China vows to take forceful measures after claiming it was the U.S. that violated the deal. Beijing's Commerce Ministry criticized Washington's decision to issue AI chip export guidelines, stop the sale of chip design software, and revoke Chinese student visas. China did not specify its threats. And here at home, AirAsia Move is contesting the cease and desist order issued by the Civil Aeronautics Board, which accused it of violating approved fare structures. This comes after Transportation Secretary Vince Dizon ordered the platform shut down, following late Air Representative Richard Gomez's complaint of being charged with 77,000 pesos for two tickets from Tacloban to Manila. Dizon accused AirAsia Move of exploiting the limited access to San Juanico Bridge. In a statement, AirAsia Move CEO Nadia Omer insisted that the platform is not manipulating ticket prices. She said the glitch was caused by temporary data synchronization issues with flight pricing partners, which affected other booking sites. The Civil Aeronautics Board issued a cease and desist order against the platform last May 26. While the company assured compliance, AirAsia Move argued that the cab has no jurisdiction over since it's based in Malaysia. With trade risks flaring up yet again, our next guest says the Philippines should start with economic policy reform amid the changing global context. With us now for more is Sunny Africa, the Executive Director of Ibon Foundation. Good to have you on, Sunny. Welcome to the program.
Morning, Cathy. Thanks for the invitation. Hello, everyone.
So what do you now mean by changing global context following the U.S. legal interventions and now the escalation of that word war between the U.S. and China? And how should the Philippines roll along with it?
I think people are underestimating what's happening with global economic policy. A lot of the narrative talks about Trump being the great disruptor, but actually, if you talk about U.S. economic policy, since the Biden administration, they've been rolling back from multilateralism since 2008. Since the Obama administration. They've been rolling back from multilateralism, sabotaging the WTO, and since 2008, 2009, they've actually been increasing their protectionist measures. So it's not just a Trump thing. It has actually been building up in the US for the last, well, basically 4 administrations now. And I think that is shaking things up. We're seeing a more siloed world, a more compartmentalized world. And the Philippines still, clings on to this vain hope that just simply opening up to foreign investment and foreign goods will be what will work for us. We just say the US sees that opening up to foreign investment and foreign goods hasn't worked for them. If the world's biggest economic power doesn't think that helps them, it seems weird that the Philippines thinks that that same sort of old school free market thinking is what we need. So we really need some sort of a resetting, I think, of our economic policies.
So, given that global trade frictions are now aggravating our manufacturing position, let's say if we open up our economy now, how will we do, our exporters and our local producers?
Opening up has been really bad for us. It's very odd for us in Ibon that people, well, mainstream economists don't seem to realize opening up the Philippine economy for the last basically 45, 50 years has caused agriculture to fall to its smallest share in the country's history and manufacturing to its smallest in 75 years. We're actually a laggard even in ASEAN. I think we have the third or maybe at best the fourth smallest manufacturing sector. So I think the bottom line is it's very alarming for us to hear that the trade delegation to the United States was actually going to counteroffer with the Trump administration to further open us up with zero tariffs and to give even non-trade benefits to the United States because that's not going to work. Opening up has advantages, but if we've left domestic producers alone and not given them the support, we won't be in a position to take advantage of that opening up. And I think one thing that we should have to correct is this half century of one-sidedness. If that's not fixed, if we still think that merely opening up will make the Philippines competitive, it has actually failed for the last 50 years. All the symptoms are there: informality, unemployment, worsening poverty, collapsing industry. I think all the signs are there that we need a pretty drastic reset of our economic
I
policies.
wanted to put that into context and visualize for the audience. The historical data that you mentioned some 50 years back, I mean, if you could just pull that up, because Philippine tariffs have plunged from a nominal average of about 41.4% in the 1980s to just
Uh,
6% today. So if you take a look at that, manufacturing should have improved by double digits. It's an inverse correlation, shouldn't have been for over 75 years, and now we're seeing agriculture even to its smallest in our history. What do these trends tell
um,
us?
Well, that's exactly the problem. There could be advantages from opening up the economy, but the government should have ensured that the domestic producers, meaning domestic manufacturing and farmers, were strong enough to compete and even export. And I think the biggest failing is that a lot of free market economists think that the competitive impulse is enough to drive more productive agricultural industry. That is not the case. In every episode of industrial development to agricultural development, every country went through a phase of substantial government support. So the biggest problem is that in the Philippines, there's this weird notion that just opening up, in a sort of Manny Pacquiao way, just opening up and making people compete with foreign producers would be enough to sort of toughen them up and make them, overcome any competitive advantage other countries might have, without realizing other companies have a competitive advantage because their governments supported them either historically or currently. So opening up the country without any sort of compensatory support for Filipino farmers, for Filipino industry, that just means that what has happened exactly, agriculture will keep falling and Philippine industry will keep falling. In a lot of ways, even our Philippine manufacturing, that's a bit disguised. The decline is disguised by the fact that, by our estimate, anywhere from 60 to 70% of what's reported as Philippine manufacturing is not actually Filipino to begin with. These are like locators in export zones, and we can't claim to be producing Intel's or Texas Instruments semiconductors. I mean, we're made an address, they get our subsidies, get our sort of, our tax breaks, fiscal support, but we're not actually producing those chips. We're not actually benefiting from that technology. And most importantly, we're not actually building the foundations of a modern Philippine economy.
Okay, so it's clear that that one-two punch isn't going to benefit us, Sunny. So how do we flip the narrative? Those negotiations are ongoing as we
Yeah.
speak. How can they make the change and make it happen for our benefit?
I think it has to start with the Philippine government has to rethink its economic policy making. If it remains trapped in this, textbook notion that just opening up is a good thing, the numbers are there, the actual experience is there. That hasn't worked for the Philippines. Now, with that insight and appreciation of the problem, that means resetting our economic policy to actually protect the domestic economy, exactly like the US is doing. And I know people are going to be saying, oh, but the Philippines is so small. How can we negotiate with the United States? Well, we're not actually that small. We're about the 12th, 13th largest population in the world. Also, we do have potentially ASEAN to work with to negotiate with the United States. The US is the biggest investor in ASEAN. A lot of their semiconductor supply chains are in ASEAN. I think if the Philippines on its own would have a hard time negotiating with the US, if the Philippines leverages ASEAN in some way to negotiate with the US collectively, I think that is a way forward. But of course, the problem there is that we do know how the Philippine foreign policy works vis-a-vis the US. I think, too many of our ASEAN neighbors are a bit more practical with how they deal with the US,
Okay.
China geopolitical rift. We've unfortunately all our chips are on one side, and I think that is a big stumbling block as well.
But it's good that you cite there the leverage that we do have. Thank you so much, Sunny Africa. I do appreciate your insights there of Ibon Foundation. And you're watching Money Talks coming right up. Singapore Prime Minister Lawrence Wong will be on a two-day official visit here in the Philippines. And Deutsche Bank says the Bangko Sentral may cut policy rates by 25 basis points as inflation stays below its 2 to 4% target. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. markets started the month of June with gains. The Dow rising yesterday, Monday, by less than 0.1%. S&P 500 up 0.4%, and the Nasdaq climbed 0.6%. Benchmark 10-year Treasury yields edged higher to 4.461%. And gold prices also climbed to $3,370 per troy ounce. Let's take a look at the U.S. futures, looking like they're pointing to slight declines when the markets open later tonight, Manila time. 0.25% lower for the Dow, the S&P, and the Nasdaq. And Asian markets are up in the first hours of trading, tracking Wall Street gains. Australia's ASX 200 climbing 0.7%, Kospi rising 0.1%, and the Nikkei 225 up nearly 0.4%. And a quick check in the Philippine markets with 45 minutes into trading, or 15 minutes into trading, the Philippine Stock Exchange Index up 0.25% at 6,366. The stock market started the month in positive territory, inching up by nearly 0.2%, with property leading local sectors. As for the Philippine peso, it opens today stronger at 55.62 to the dollar. The peso closed yesterday slightly stronger at 55.70 against the greenback. And developed markets saw a rally in May after President Trump temporarily halted his tariff policies. In contrast, mirroring emerging markets, the PSEI ended the month with a near 0.25% decline, exacerbated by MSCI-related outflows. It mirrored declines in emerging markets, all struggling to keep pace with the recent surge in U.S. yields. This driven by Moody's downgrade of America's credit rating, dampening investor appetite for riskier assets, says Ron Acoba of Trading Edge. Looking ahead, Acoba anticipates the PSEI to consolidate and move sideways. However, a potential rate cut by the Bangko Sentral on June 19 could rekindle investor interest. With us now for more is Japheth Tantiangco, Research Head at PhilStocks Financials. So good to see you again, Japheth. Welcome back to the program.
Good morning, Ma'am Cathy. Good to see you too.
All right, so put us up into context here, because how is it that developed markets actually posted gains in May on a month that we'd been troubled about the pause? Emerging markets fared not too well, as you've seen, PSEI down by about 0.25%.
Well, overall, it can be attributed to the confidence towards the strength of their economies. I mean, right now, we are really in uncertain times. We have heightened uncertainties, heightened risks because of what the U.S. is doing, particularly with its protectionist trade policies. And of course, there's the downgrade by Moody's, which caused yields in the U.S. to rise. And during times of great uncertainties, of course, investors tend to go to those which are relatively safer. I mean, if you're going to talk about sentiment, investors right now are in a risk-off sentiment. So, they're really going to avoid or minimize risk as much as possible and go for safe havens.
But
and
I would have thought that emerging markets like the Philippines would have been the more resilient ones because it's been least exposed to the global trading uncertainties. But it appears now that we're seeing the cracks there, especially with manufacturing, as Sunny had explained, that we don't really produce the high-end products that would really make us competitive.
Yep. Yes, it's true that somehow the Philippines is not that as exposed like other countries with respect to the global trade problems. But at the same time, I mean, we still have problems of our own. I mean, if you're going to look at the local economy, I mean, we're not as growing as fast as before. And at the same time, of course, as you've mentioned, we have our manufacturing sector, which, unfortunately is not as competitive as the others. I mean, yes, we are still on the lower end of the global supply chain. And so investors are also looking at that. And of course, the global trade uncertainties, yes, if we're going to talk about direct effects, it may not be that much. But indirect effects, there will be a lot to the Philippines, especially with the two top economies right now fighting, the US and the China. And of course, because of that, investors will still, go for the relatively safe economies. And of course, the Philippines is not one of them.
Not one of them.
Yes.
In spite of the fact we had a midterm election that really boosted consumer spending in at least the first 5 months of the year. I just wanted to show some graphs here because very interesting. In the midterm elections that have passed, in those years, in 2013, 2019, and this year,
Yes.
mixed picture.
Yep.
Couldn't really quite get a trend here. If you take a look at 2017, I'm looking at declines in the PSEI, but then an increase in the 2019 midterm election year. So what does that tell you?
Well, with respect to the midterm election years, we've had mixed results. 2013 we've declined, 2019 we rose, and then finally 2025, at least for May, we declined again. But I believe this can be attributed more to the economic environment that we are moving in back then, or the factors that, the other external factors to be considered. Like, for example, in 2013, we were having problems because of the so-called Fed taper tantrum, wherein they said that they're going to reduce their, their monetary policy easing, their quantitative easing, and that in turn caused a spike in yields, which in turn caused the market to decline back then. And right now, the story is similar. Yields in the US are also rising, but for different reasons. This time it's because of the global trade uncertainties, and that caused the market to decline. So I believe the decline in 2013 and in 2025, this is more attributed to the external factors at play, which negatively weighed on sentiment.
Well, let's take a look at it from another way, because Trump's 1.0 and 2.0
Yeah.
also have different outcomes
Yes.
so far. When we look at the markets, just taking a look at the chart, just revisiting that, we've seen a more benign picture, I would say,
Yeah.
in Trump 1.0.
Yes.
What made it a little bit more toxic for 2.0?
Okay. That's going to be 2017. Trump won, the first term of Trump started in 2017, and then the second one is 2025. It can also be attributed to the other factors at play. In 2017, investors were optimistic because, number one, I mean, you had back then President Duterte, who was promising to prop up the local economy through his Build, Build, Build program. And that in turn caused investors to expect that, okay, so because of this infrastructure push, the local economy would be able to sustain its growth momentum, which is at 6%. So we had a positive economic picture back then. At the same time, Trump didn't immediately start his trade war in his first term. The very first time that President Trump pulled the trigger on the trade war was in 2018, and that is by slapping China with 10% tariffs. This time around, it's different, because this time, as soon as Trump took the seat in the office, he immediately pulled the trigger on his protectionist policies, and that in turn caused an immediate uncertainty within the market, which caused us to decline or caused us to have, somewhat a negative performance in the Trump 2.0.
Interesting, just looking back at that and how tired we've become of just like to and fro. Let's take a look at the second half of the year then, because it seems that everyone's just hoping that policy rates will come lower. That's the only lever left.
Yep.
To invigorate, at the very least, the stock market. So what are the expectations, and how should investors position then? If indeed we already know what the risks are and how risk appetites have come through, how do we then act or react for the second half of the year?
Well, for the second half of the year, what could happen and how could we act? Well, number one, yes, the main driver or the main thing that's supporting the market right now is the expectations of policy rate cuts by the BSP. And of course, given the picture that we have right now, slowing growth, slowing inflation, peso is strong, there's a possibility that the BSP could still grow aggressive. 75 basis point rate cut is on the table. But of course, that's just one side. I mean, there are, a lot of things need to happen in order to, to boost the local economy, in order to bring the local economy back to its glory days. And so I believe this is what investors will be watching out for. It's not really just about the rate cuts, but in general, how would the local economy perform? And of course, is that going to trickle down to the corporate sector? And
so is it a wait and see then for equities?
Yes, it's most likely going to be a wait and see. But at the same time, okay, so let's talk about fundamentals and sentiment. I differentiate the two things. Fundamentals, we are at bargain levels. We are below average PE, historically and regionally speaking. So a lot of stocks are at bargain. But are we expecting stocks to rise in the short term? Probably not yet, because of the ongoing sentiment that we have right now, plus the wait-and-see attitude of investors.
I'll hold on to that and hold on to some hope. Thank you so much,
You're
Jeff
very much welcome.
Appreciate it. Phil Stocks Financial. And coming right up, the SEC has approved Maynilad's 45.8 billion peso initial public offering. Keep it here on One News. watching Money Talks on One News. Singapore Prime Minister Lawrence Wong will be on an official visit to the Philippines beginning tomorrow, June 4th. The two-day official visit will be his first bilateral trip since he was reappointed to office in May. President Marcos and the Prime Minister are expected to explore more opportunities and exchange views in key political and economic developments in the region. Singapore is the country's 8th largest trading partner in 2024. This is the first time a Singaporean Prime Minister will visit the country since 2017. Deutsche Bank says the Bangko Sentral ng Pilipinas may cut policy rates by 25 basis points in June and in August as inflation stays below its 2 to 4% target. Deutsche Bank recently lowered its inflation forecast from 2.4 to 1.9%, saying the risk of breaching the Bangko Sentral's target is limited. It cites low rice prices as a factor, driven by the global supply glut, 20 pesos subsidized rice, and lower tariffs starting June. Earlier, Bangko Sentral Governor Eli Remolona said easing inflation gives room for 2 more rate cuts this year. The next policy review is on June 19th, followed by meetings in August, October, and December. The Philippine Statistics Authority will release the May inflation data on Thursday, June 5th. The SEC has approved Maynilad's 45.8 billion peso initial public offering. The Pangilinan-led water provider is set to list on the Philippine Stock Exchange by July 17th. The IPO consists of over 1.9 billion primary shares, as well as 355 million secondary shares to be sold by its principal shareholder, Maynilad Water Holding Company. Maynilad will offer up to 1.6 billion common shares, a 249 million share over-allotment option, and 25 million preferential shares, all priced up to 20 pesos each. The offer period runs from July 3 to 9. It is the PSE's second IPO this year after Cebu-based Topline's 733 million peso debut in April. And here are the headlines around the globe. In Turkey, a new round of talks between Russia and Ukraine yields little progress one day after Kiev launched its most audacious airstrike yet. Russia only unveiled its demands on Monday, most of which Ukraine already rejected in the past. Both countries only agreed to exchange 1,000 prisoners of war, either severely ill or under the age of 25. Ukrainian President Volodymyr Zelensky hopes Russia would be forced into diplomacy after Ukraine destroyed over 40 Russian warplanes. Drones attacked airfields spanning 5 regions on Sunday in an operation dubbed as Spider's Web, which took a year and a half to plan. Analysts believe the airstrikes have put a dent in Russia's ability to wage war and threaten more distant rivals. And in Italy, tourists on Sicily Island have evacuated after Mount Etna erupted. Etna is one of Europe's largest and most active volcanoes. Authorities said the explosions were only confined to the summit area, which was closed to tourists. No deaths, no injuries were recorded. And before we go, get your brellies ready. Pag-asa has officially declared the start of the rainy season on Monday, June 2nd. This comes after days of scattered to widespread rain brought about by the southwest monsoon, locally called habagat. However, while rains are expected this season, Pag-asa says there may still be periods of reduced or no rainfall. Well, I'm getting ready just the same and putting in that raincoat and brelly in the bag. That's it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.